So let's get started. I think, the first slide which we wanted to cover as a part of the NSE deep dive was the current status of capital markets in India. So what this first slide gives you an understanding is how has the percentage market cap to GDP compare for Indian markets and global markets. So India's market cap to GDP ratio currently stands at a 98% ratio, which, as if you compare with the global average, it is at 134%, and for more developed markets it is even higher in the range of 190-160%. So this actually gives you a trend that Indian markets are actually under penetrated or under utilized in terms of how many companies have actually tapped the market for raising funds. So our single biggest insight from this graph is that more corporates are expected to tap the financial markets, and this segment is supposed to grow in our expectations. Next, this graph actually shows us how the capital markets have grown over the years. So if you look at this graph closely, in FY10, that is just 12 years back, the average daily turnover for all of the exchanges combined, and this is not just NSE, this is an overall industry overview. So for all of the exchanges combined, FY10, there was a market cap, the average daily turnover was close to 1 trillion rupees. This has grown over the last 12 years into a current year run rate of almost 57 trillion. So which is a 57x jump in barely 12 years. So this actually gives us an understanding that yes, whatever we had seen in the previous slide, that the Indian capital markets are under penetrated. The India is at a 98% coverage ratio in terms of market cap to GDP. That has actually manifested widely over the last 12 years. So the entire capital ecosystem has grown very, very fast in the last 12 years. Now let's look at the entire exchange landscape which is present in India and how does it work out. So there are primarily 6 exchanges: NSE, BSE, MCX, NCDEX, MSCI and ICAI. Out of these, 3 are stock market exchanges, 2 are commodity exchanges, or other 3 are commodity exchanges. So NSE, BSE and MSCI have equity and commodities. MCX, NCDX and ICEX are pure play commodity exchanges. Now if we just try to take a step deeper into this and we want to understand how the entire exchange space plays out. So if you see for NSE, let's just take the equity cash segment for our first example. So in the equity cash segment, NSE has a market cap of, or market share rather, of 92%, whereas BSE has a market share of only 8%. If you compare this to the derivatives market, NSE has a market share of 99.8%, whereas BSE stands at a measly 0.02%. So this is practically 100% market share for the entire country. Once we come to the commodity derivative exchange, NSE has a very, very low market share of 0.2%. BSE is still dominant with a 9.5%, but MCX leads the entire commodity derivative exchange business in India with a whopping 85% market share. And in terms of currency again, NSE is a leader. So NSE has a 73% market share in the currency derivative segment, whereas BSE is at a 26.5%. So broadly, if we try to understand the landscape in terms of equity, with the cash segment, it has a market share of 92 and BSE has a cash segment market share of 8%. Derivatives is almost 100% with NSE. Currency is about 73%, and commodity is one segment where we feel that NSE has not been able to make its mark. Apart from these, smaller exchanges are there, but I think the business in these exchanges is very minuscule. MCX and NCDX are the ones which are still flourishing. So NCDX is a 5.8% in market share in the commodity segment, and MCX has a huge 85% market share in the commodity derivative segment. So the essence of this chart is NSE is absolutely an undisputed domestic leader as far as stock exchanges go. Now, as a part of our capital market overview, trying to understand how the Indian markets play out, there is a very high contribution of F&O in the Indian market. And how high is it? Let's have a look at that growth or that movement in the last 10 years. So if you see FY10, in 2010, equity FNO was 77% and equity was 23%. And this has moved over the years, and equity FNO has acquired the majority space, taking 96% of the total trades, whereas the rest of the equity, currency, FNO, interest rate, future and commodity are holding only 1% each. So when we were doing the research, what we found is India and Korea. These are the two countries where there is a very high dependency of the entire market volume on the FNO segment. So essentially, if someone wins the FNO segment, he is able to win the Indian capital markets entirely. And this is what we saw here, that NSE has been able to completely capture the entire equity derivative market space. Right? Moving on. So how does NSE stand? So NSE is absolutely the undisputed market leader in most of the asset classes as far as the Indian markets go. It is also ranked among the top 10 global exchanges in various asset classes. And I assume that in the derivative segment, it is actually the largest exchange globally as well. Now, what are the reasons of the Indian markets behaving in this manner, and why has NSE been able to take a market leader space? And why are financial markets itself at such a inflection point as far as the Indian ecosystem goes? So the first reason is that in the Indian ecosystem, the demat account opening has been humongous. So I think everyone, आपको भी पता है कि in the last 2-3 years, right from the start of COVID, discount brokers completely capitalized on the market, and a lot of retail investors actually jumped in. And this increased the entire growth rate in the demat section, and the number of participants in the market went for a huge toss. So if you see, in the last 2 years, the growth rate for the equity or the total turnover has been close to 90%. So FY20 to FY21, the market has grown by 90%. Again, from FY21 to FY22, the market has again grown by 90%, which is, I think, faster than any of the previous 10 years combined. Right. And the other reason why NSE is so interesting is because it has a huge operational play, or even for that matter, any stock exchange. So with a stock exchange, what happens is there is a certain amount of investment which goes into installing and building the technology and bringing in the sellers and the buyers. But once it is there, the network effects start coming in, and the company actually is able to have a huge operational margin, in the sense that it is able to grow its turnover exponentially without having to invest extra money into its fixed costs. And therefore, if you see, fixed costs such as employee and tech expenses only constitute 50% of the total operating expense. And NSE enjoys an EBITDA margin of close to 67%, which is, I think, phenomenal for any industry. And especially in the stock exchange industry, it is, I think, one of the best EBITDA margins in the world also. So from what I recall, on an average, we have seen that globally exchanges make a EBITDA margin of anywhere from 40 to 60%. The best in the class, I think, was London Stock Exchange, which was having a EBITDA margin of 67, 68 or 69%. But NSE comes up as a close second or a close third, and with an EBITDA margin of 67%. And this actually gives us an understanding that, NSE is actually a very well-run company as far as the operational efficiency goes. So they have been able to manage their employee cost, their tech cost, their development cost fairly well, and therefore they have been able to enjoy very huge margins on their entire revenue base. Now let's dig deeper into how the entire cash segment has played out. So if we refer to the equity cash segment for the Indian ecosystem, the cash space has grown from an average daily turnover of 33 billion in FY 2002 to 744 billion, which is a jump of more than 20x in the last 20 years. And the growth ratio has been an average, I think, close to about 20-25% over the last 20 years. And in this particular equity segment, if you see how NSE's market share has grown, so FY 2002, 20 years earlier, NSE had a market share of close to 63%, whereas BSE had a market share of 37%. And from FY 2002, NSE has continuously taken the market share out from BSE's coffers, and it has increased its entire market share, which now stands at a 92% market share, whereas BSE is only left with a measly 8% market share. So this is as far as the equity cash segment goes. Now let's see how things have moved for the FNO segment. So in the FNO segment, the equity of the average market has grown from 0.2 billion to almost 54 billion, which is more than 100x growth, which, compared to the equity which had grown only 20x in this same time span, equity options are the one which have grown extremely fast. And the major growth has come in the last 3-4 years. If you see here, from FY19 to FY22, it has grown from 8 billion to 54 billion almost. Similarly, if you see the equity future turnover, it has grown from 291 in FY9 to 1115, so almost 1000 billion on a daily basis in terms of futures turnover. On an average, with the futures and the options, this is how the entire market share has moved. So in FY9 also, NSE had a market share of 100%. In FY22 also, NSE has a market share of 95%. And this is primarily because NSE has always been a front runner in developing technology and making sure that the systems are very, very well run and bringing out the best in terms of platform for investors. And therefore, it has always been able to capture the entire market in the FNO segment. Now, one interesting point here is what happened in FY13 to FY15. So FY9 NSE is at 100%, FY22 NSE is at 95%, which is again almost a monopoly kind of a setup. But what happened in this period? So in this period, BSE has actually come up with a new scheme wherein instead of charging brokerage, it used to give brokerage to the market participants to use its FNO portal, right? So instead of actually charging you to actually punch in a trade, BSE actually used to pay brokers and market intermediaries to use its FNO platform in the hope that once the volume builds out, they will be able to retain and then withdraw their entire support mechanism. But what happened is, till the time they were extending the support in FY13 and FY14, they were able to increase their market share. So they started with 2%, they were able to get to 30% very, very quickly. But in FY15, they actually withdrew this. So instead of now paying the brokers, they were now charging the brokers for using their FNO platform. And this actually led to an immense fall in their market share in the FNO segment from again 30% to 7%. And by FY17, they were almost completely wiped off. So FY17 again, NSE had 100% market share and BSE was completely out of the game. So what this basically shows us is that if you consider the derivative universe, which is futures and options, NSE is an undisputed market leader and it has an excellent control over the entire space. So once market was again back to normal economics by BSE removing the surprising incentive, NSE again decided to, or NSE was actually able to again capture the entire market for FNO. Now let's understand how does NSE make money. So the first category is transaction charges. Now this is the largest portion of NSE's revenue. And I think this forms close to 60-65% of NSE's top line, which is close to 7,000 crores. So out of 7,000 crores, 60 to 70%, which will be close to 4,800 or 5,000 crores, will come out of this. This is basically the charges which NSE adds on to any transaction. So if you buy a share directly from an equity cash market, or if you do an FNO transaction, NSE will charge a specific amount to the broker, who then bills it to you by adding his brokerage, and this forms the majority part of NSE's transaction charges. Next is treasury income and clearing and settlement of funds, and tech and information solutions. So tech and information is basically data providers. NSE does a lot of data feed providing to a lot of individual users. It consists of that. Then it consists of co-location, network and platform charges. And this is a very small portion of NSE's overall revenue, which is close to, I think, 10% of its overall revenue. And this is a very, very interesting segment because for majority of the large exchanges, tech and information segment solutions actually present more than 50-60% of, or maybe not 50%, but I think close to 35 to 40% of their entire top line. So for NSE, this becomes a very important criteria or very important growth lever in the future years, wherein it can create new tech and information space, and it will be essentially be able to grow their money here. It also does some services to corporates. It also has some feeds for data dissemination, and it has some income from investments and other deposits. It has also some other income which are in revenue in nature, majorly from rent and other training institutions. And these are majorly derived from the various subsidiaries which NSE has. Right? Moving on. So now that we have understood what is the overall breakup or what are the various sources of revenue for NSE, let's take a deeper dive and understand what is the split of revenue for NSE. So out of its total turnover of 9,800 crores for the last FI, which is the FI 21-22, it had 7,000 crores generated from trading services, which is basically transaction charges. So any fees which NSE levies on a transaction gets accounted as trading services here. Clearing services is what is provided by NCCL or National Clearing Corporation Limited, which is a 100% owned subsidiary of NSE. Data feed is basically ticker. So, like we are able to see on money control, what is the current Nifty, what is the current price for Reliance, ITC, Tisco, Tata. This is the revenue which is taken from data feed services. Index licensing services is again a revenue which is drawn from one of the subsidiaries for NSE, and this is the income which NSE generates from giving index services like Nifty Bank Nifty, Nifty as the index himself, and this is close to 206 on an annualized basis. This is revenue. 140 crores is a very small revenue from other strategic investments, and they have other miscellaneous segments like training, education, some tech support which they provide, against which they are able to generate close to 800 crores in top line. So what is of note in this slide is, out of the 9,800 crores of revenue, 7,000 crores is coming from trading services, which is pure play charges which are levied on the transactions which are happening on the exchange. But the rest of the headers contribute a very small percentage to the top line. And if you compare this to global peers, as an exchange matures, this portion generally takes up a larger portion of the top line. Therefore, we also expect, while the capital market will continue to grow, these services will also form a large part of NSE's top line going forward. Now coming to how has the net revenue or how has the financials been for the last 5 years for NSE. So if we see FY17, NSE did a top line of 2,100 crores, and in March 2020 it did a top line of almost 9,000 crores, so which is almost a jump of 4.5x within a span of 4 years. Coming down to the bottom line, NSE posted a PBT for the current year of 6,731 rupees, and for FY17 I think it was close to, so in FY17 it had a PBT of 1,600 crores, and in FY22 it has gone up to a whooping 6,700 crores, which gives you a amazing CAGR of 32%. Similarly, its profit after tax has also gone up with a similar tune, from an average of 1,200 crores to almost 5,200 crores, posting a total return of close to 33.6%, which is beyond phenomenal for any business. Now let's see how overall the ratios for NSE play out. So NSE's revenue growth, and this is year on year. So this is FY 21-22 versus FY 2021. So over the last 2 years, NSE's revenue has grown by a whooping 36%. Its cost to income ratio stands at 67%, and this is similar to what we had seen earlier with the EBITDA at a 67% level. So this is a similar number which comes here. While its revenue grew by 36%, its EBITDA has grown by 42%. Its PAT has grown by 35%, and in the current year it has actually posted a EBITDA margin of 77%. So these numbers, I think, are the most important figures on in the entire presentation. This is like the holy grail of investing, wherein you get to see a company which is growing very quickly, and while it is growing, it is also able to generate a lot of money while doing so. Now, in terms of valuation, how does it play out? It is enjoying a ROE, or a return on equity, of close to 38%, return on asset overall of 16%, a dividend yield of 1.35%. So, if I can give you a small understanding, I think within the last year, NSE has announced a dividend of close to 64 rupees and 42 rupees, close to 120, 130 rupees. And an average price for NSE for the last year would be close to a 3,200, 3,300 level. So it has given a massive dividend to its investors also, and overall also it has been able to generate a significant amount of ROE on their invested capital. On the price to equity, we will come in later. We will be covering valuation in the upcoming slides, so we will cover this at a later stage. Okay. Coming next to a deeper dive on NSE subsidiaries. So this is how the NSE subsidiaries look like. So it does a 100% subsidiary in NCCL, which is National Stock Exchange Clearing Corporation Limited, which is basically the clearing arm. So whatever trade gets punched in to NSE, that is then redirected to NCCL, and NCCL then does the major execution and then transfers the trade back to NSE. Now this is a subsidiary called NSE IFSC. NSE Investments is another wholly owned subsidiary which has made a number of different investments into NSE Infotech, NSE Indices, NSE IT, NSE Data, NSE Talent Split. NSE IT is basically the company which provides services for data feeds. NSE Indices is the company which provides services of creating indices like Bank Nifty and Nifty. NSE Academy is what is giving education and upskilling services. So this has again become a very successful business, and growing forward also we expect this to grow by leaps and bounds, wherein new people would want to train directly from an exchange certified program, and this will probably become a large source of revenue for NSE going forward. Coming to next, NSE IFSC. This is the International Finance Center which is being developed as a part of the GIFT City. We will cover this in a separate slide. This is a very interesting company which NSE has a holding in, and I think this will again this holds a very interesting way forward journey in the next 2 to 5 years at least. Apart from the 100% owned subsidiaries, it also has a number of associate companies. So in NSDL e-governance, NSE has a holding of 24% each. It has some smaller investments in Capital Quant, NCDX, Receivables Exchange, and India Gas Exchange. So majorly all of these businesses are linked some way into creating a marketplace or creating an exchange, and they have some strategic overlaps in terms of business models with NSE as well. Great. So now I think we have covered some of the basics, what NSE is, what NSE does, how has it played out in the past. Now let's come to how NSE's valuation compares to global peers. I think before this let's see the slide. So essentially, let's cover this at a later stage. It will be very relevant once we come to that. So I think we were talking about the GIFT City. Before that, we would want to cover another very critical opportunity for NSE, which NSE has capitalized very well, and that is something called co-location. Now, what is co-location? Essentially, if the server through which a trade is being punched is at a distance from NSE's own server, it takes time in transmitting the data. So what NSE came up with a new platform is brokers could actually place their own server within NSE's premises, so that the transmission time gets nullified and there is a complete immediate transfer of data from a co-located server of a broker and the exchange services. And they started this service in close to 2009. And what is of note here is how this entire thing has expanded. So co-location income has contributed in the last financial year more than 50% of the total transactional income for NSE. So right from FY17 or 2009 when it got started, from 2009 to 2017 it went up till 24%. But in the last 4 years it has gone up again doubled from 24 to 52%. So out of a total transaction charges of I think close to 7,000 crores, roughly 50% is now coming from co-located servers, which actually shows how important NSE's entire co-location business has become uh, to the entire company. Now let's come to the next large opportunity of Gift City. So Gift City is basically a SEZ kind of a model wherein the government has given certain exemptions. So there is no stamp duty, there is no GST, there is no TDS, there is no withholding tax, and this has allowed people, or this has enabled exchanges to set up their shop there and then address equity shares of companies incorporated outside India, issue depository securities and debt securities of eligible issuers, do tradings into currency index and interest rates, and basically permit trading in assets which are not denominated in the INR. So this is actually catered towards either investing outside India by Indians or giving a easier route for non-Indians to invest into Indian indices. And what is an interesting part of the IFSC is that the SGX Nifty, which is actually a very large way of how global investors hedge their interests in the Indian markets. So SGX Nifty will now completely shift to the gift part of the IFSC. Now IFSC will provide the service of SGX Nifty, wherein global investors will actually take their calls or hedge their positions in the Indian markets through the IFSC holding of NSE. Great. So NSE has actually, now I think we have covered the capital market space, we have covered NSE's business, how does it make its revenue, what is its financials, how has that grown in the past, and up till now I think everything was all roses and blooming for NSE. But in the last 4 years, NSE has also been part of a number of government scrutinies, and it has faced a lot of challenges as far as the entire corporate governance piece goes. So let's cover the first and the largest rock which is holding back NSE's IPO. So what happened was, we discussed co-location earlier in an earlier slide, wherein basically the concept is that instead of having the server of the broker at a distance from NSE's own server, they place it within the NSE building itself, and therefore they are able to get a faster or low latency in their trades. Now what happened with co-location is, the NSE actually had some backup servers which it allotted to certain brokers, and this gave those brokers an edge over all other co-located servers also. And this essentially minute millisecond difference or millisecond advantage that those particular brokers had who were using those backup servers, that actually helped them to really change the entire market landscape and actually beat the entire retail investors, get an upper hand and to make a lot of money basically. And this entire case got started in 2010 or 2011 when BSE complained to SEBI that NSE was using anti-competitive co-location practices. Then in 2012, SEBI started the entire investigation into the co-location. It went to the SEBI TAC, wherein SEBI revamps the NSE's board of directors. Deloitte was hired to do a forensic report on NSE, and Chitra Ramakrishna, which is the main villain of an NSE story, actually had to resign in December. In December 17, Vikram Limai got appointed as the new MD and CEO of NSE. He continued to be the NSE's MD and CEO up till just a month back, when Mr. Ashish Chauhan, who was the current chairman of BSE, actually took reins of NSE. And Ravi Narayan was another culprit who was in cahoots with Chitra Ramakrishna, also resigned in June. So essentially by 2017 it was very clear that there was some mess up which had happened, or some big fraud which had happened within NSE, especially in the co-location space. In 2018, CBI got involved, and there was a FIR which got filed under NSE's name, and SEBI then issued a show cause notice to NSE that why on the entire co-location piece. And since the last 3 years, NSE got, I think, fined close to they were supposed to then keep a sum of money with the regulator, then the regulator released it. They imposed a fine of I think close to 2000 crores 1.5 years back. NSE decided to pay off that fine, and now the co-location scam or the co-location scrutiny has almost come to a closure, wherein all of the government bodies have passed on their fees and their penalties and their final verdicts, and NSE has paid off all of the fees, penalty, fine, interests to the respective agencies, and now possibly we are looking at a scenario where this co-location thing can be quickly resolved for NSE. While this was happening, there was another case which got opened for NSE, which is again a very interesting case. So there was an allegation that Chitra Ramakrishnan was divulging internal company data points to a Himalayan yogi, and the Himalayan yogi was actually guiding the MD for NSE on how to run the business, who to appoint as the COO, and how to take business-led decisions. And the entire audits which was conducted by CBI here, they got access to certain mail communications between Chitra Ramakrishnan and this mysterious Himalayan yogi. Chitra Ramakrishna was actually arrested, I think a couple of weeks back, for the entire piece with the yogi and on divulging NSE's internal trades practices, taking advice from him. So I think that is another scam or another discrepancy or corporate governance lapse which happened in NSE, that the MD and the CEO was involved with an outside party who was essentially guiding her and advising her on various things which were pertinent to the company itself. So now with all of these scams, obviously NSE's IPO got delayed. So let's look at how the entire timeline has flowed. So December 16 was the first point of time when DRHP for NSE was filed. So in December 16, NSE filed their first DRHP. In April 19, SEBI actually banned NSE from accessing the capital markets for 6 months because of the algo trading scandal. In May 19, NSE was penalized up to 1,000 crores, and some of its directors were actually personally made liable. They were supposed to pay back 25% of their entire salaries, and personal cases were also filed against them. In Jan 20, Mr. Vikram Limai again approached SEBI to seek an approval for the IPO, but because of the co-location case not being solved and the Asset Yogi case again coming up in the media, its IPO again got delayed. In FY21, Madras court actually filed a stay on NSE's IPO, again because of the various allegations against NSE. So now most of the open issues which were actually holding back NSE's IPO are slowly coming to a close, because the recent board is completely over and above any of those allegations which are open in the media right now. The company as a whole has been penalized, has paid its dues of 1,000 crores for the co-location scam. And hopefully the idea is that between 2022 end and 2023 end, we should start seeing some green shoots again on NSE's IPO. So the essential market expectation is that the listing should happen anywhere between 22 and 23. Now let's come to the valuation. Now this is a very interesting slide, right? So while NSE is an excellent company, there is a weird valuation aspect which is playing out in the markets right now. So when we tabulated NSE versus BSE, what we saw is that BSE is actually trading at a PE ratio of 35.5x, whereas NSE at a market cap of at a per share pricing of 3,000 rupees is actually at a very low price to earnings, I would say, at a very low PE ratio of only 28x, which is actually a 6x cheaper valuation when you compare it to BSE. Now, this could happen because of a couple of reasons, because there were certain corporate governance issues with NSE. BSE is actually already listed, so there is a liquidity discount which should come into play when you are valuing NSE. But even then, what we feel is that NSE also has a number of things which are in support of NSE. So, the kind of dominance which it has in terms of equity market share or FNO market share, it is just unparalleled. So with FNO enjoying a market share of more than 95%, with equity cash market enjoying a market share of more than 90 to 93%, I think that entire monopoly game should also play out in the NSE's pricing, which we feel is, not reflected in the current pricing. So let's see how the entire price graph has moved. So Altius as a firm got involved in NSE, or we started pitching NSE to our investors, wherein a lot of people who invest with us got invested for the first time in December 19, which is almost 3 years back, for just 800 rupees per share. And this was the first block of NSE which Altius brought and made available to its clientele. And from 800, it had a very steep run to 1400, then to 1700, then to 2400, and last year December it was close to a price of 3800 per share, which was its peak. And during this is when the entire scam for Colo and for the Asset Yogi and for the Chitra Ramakrishna Yogi scandal started coming to light, and then the CBI found the mails, and the newspapers started covering the entire aspect, and this is when NSE again started falling. So it has corrected almost 25% from its absolute peak to a current per share valuation of close to 3,000 rupees per share. Cool. So I think this is primarily what we wanted to cover. So we started off with covering why NSE got formed, what is the current capital market situation in India, why is there a huge room for the capital markets to grow, how has the NSE's financials played out, what are its revenue sources, how does its valuation compare with BSE, MCX, global peers, and this gives us a very good overview or a very deep insight into the entire business. Now what we would want is, if we can open up the space and we can get some questions, we can take those on one-to-one. So let me just shift to OBS. Great. So I think I have a couple of questions which have already started showing up. So let me start taking them one by one. The first question is, what is the minimum lot in NSE when its IPO expected? Is it the right time to buy it in the unlisted share space? Okay. So the first question is, what is the minimum lot? So currently minimum lot for NSE is at 500 shares, right? And I'll tell you why NSE is at 500 shares is because NSE does not get transferred like a simple off-market transfer for most companies, wherein you transmit the money and the shares actually transfer to your account within a 3 to 4 hour time span. NSE is classified as a MII, or a market intermediary, and for any transfer of NSE shares, the approval needs to come from the NSE's board, right? And this process takes a 2 to 3 month timeline and requires a whole lot of documentation in terms of net worth certificate, bank statements, declarations, money laundering declarations, and therefore this entire documentation to create takes about 7 to 8 days, and then to get an approval from NSE it takes another 2 to 3 months. So therefore, generally what we say is that for any transaction to happen, we keep the NSE's minimum lot at 500 shares. The second question was with respect to IPO. IPO, like we explained earlier, is expected at close to 2020 to 23. Is this the right time? So personally, we have been very, very positive on NSE. Even if we compare it to a pure play fundamental right now, at a valuation wherein a PE comes to a 29x in the current as per the last financials, and BSE is at 35x, we think that there's a lot of room for NSE to go up. Is this the right time? So I think because it has rationalized quite a bit from its earlier levels of 3600 to 3800, I think for an investor who's looking to get an entry, this should probably be the right time to get started. Sorry. Next question. Tarun Paliwal says that I have heard that there's a minimum of 500 shares of NSE that is too high from a retail investor's perspective. Kindly provide minimum 250 shares so we can think of that. So Tarun, we can actually do that as well. So I think 250 shares is again something which we are planning to start off with, because Altius has now completed close to I think maybe close to 85 transactions in NSE, and therefore we have been able to set up a very concrete process wherein we know how to reach out, what documents to prepare, what problems come in those documents, and then the entire the transaction has become fairly smooth for NSE, as an entity. Therefore, we think we can do a 250 share transaction also, but we will take that on a one-to-one basis. So the next question is, can the lot size be reduced? So, like I said, generally we try to keep the lot size at a 500 share level, but 250 shares is again something which we can look at. So anyone who's interested, can get in touch with Nikunj from our team. Nikunj credentials, both mail address and mobile number are available on the screen. So you can just get in touch with him and he'll help you organize transaction at NSE. Next question is Care Health Insurance and Pharmacy IPO. When will it come? Any idea? Okay, so in terms of Care Health, I think the IPO was planned by its parent Religare, but because of the current market conditions, it has certainly gotten delayed. So Care we are again expecting somewhere in 2023-24. Pharmacy is certainly delayed because they had done a pre-IPO round in November 21 and then they were filed for the IPO in December 21. They got the approval for the IPO in January 21. But post that, I think with the entire tech collapse and the entire fall in prices of Zomato, Policy Bazaar, Nykaa, I think they are staying put. So now they are doing a private round, and therefore I think Pharmacy's IPO is at least 3 years away in my expectations. NSE has a court issue with MSCI. So coming to the next question, Mr. Jagdish is asking, NSE has a court issue with MSCI. What is the state of it? Somewhere I have read an article where NSE is interested to settle the issue out of court by paying some money. Absolutely right. I think this is exactly the status in which it is still stuck. So MSCI had actually filed a case against NSE for anti-competitive practices, and NSE has actually, I think, given some indications that they will engage in arbitrage and maybe they will settle the entire thing out of court. Do you advise to add on more for existing investors who had bought it at lower prices now? Yes, I would. So I think this question would have to be taken on a overall portfolio perspective. But if the question simply asks that whether NSE at this price looks like a logical buy, a plain simple answer to that question is yes. But maybe from whether you should buy or not would depend upon how your entire portfolio is, and how do you plan to use your funds, and what is your overall risk and return profile. Trading volumes have come down in 2022 based on NSE's trading data. So do you see some correction in stock price? And 2023 results could show decline in profits. I don't think so, to be honest, Mr. Mahesh, because the trading volume has actually come down in the cash segment, and the FNO has more or less stayed intact. I think it's a fall of maybe 5-10%, but I think that will eventually get covered once the market picks up in the second half of the year. So I don't think trading volumes are too much of a concern, because once the demat accounts are there, once people are involved, they may dip for 6 months or a year, but the trading volumes will definitely come back as the market rebounds. And primary assumption is that India is a growth story, and therefore Indian stock market as a whole will do excellent in the next 5 years. And if Indian stock markets and Indian consumption story plays out, NSE will be one of the major benefactors, as it is controlling a large portion of the entire capital market space. The next question we have is it a good buy for MSCI? So MSCI per se does not have too much volume, so it's more of a dark horse, very high risk, very high reward. So it is available at the face value. So it is available at face value because there is no business in the exchange per se. They have been trying very hard to bring up volumes, but they have not been successful at all. So will not suggest as an investment, but something more like a very high risk, very high reward kind of a scenario is what MSCI is can be looked at, but definitely not as a very good investment opportunity in my opinion. Great. So I think most of the questions have been answered, and we've also If we are at 5 p.m. and we usually try to keep these things under 45-50 minutes. So thank you for joining in. If you have any follow-up questions, the credentials for our team are given on the screen, and write to us, and we'll be happy to take those on one-to-one. Just before we go, I think there's the last question which has been put up. Will you see SEBI giving more priority to BSE so they can keep that competition? Yes, I think that is a very realistic risk which I foresee, that because NSE has a very dominant position, SEBI might actually try to intervene and maybe not side with BSE or prioritize with BSE, but also try and bring up a new exchange so that the entire market share gets split between the market participants. So that is one of the major concerns which we have going forward. But for that to happen, we at least see a 10-year time horizon, because for anything to be introduced and anything to be brought up, it will at least take 5-7 years. So there has been no concrete steps by the regulator, at least till date, in that direction. So even if it happens, it will take a lot of time to actually play out. Great. All right, everyone. It has been a pleasure, answering all your questions and presenting NSE before you. In the next couple of weeks, we'll be coming up with more interesting companies. Stay tuned. Follow our page to get the latest updates. And see you later. Thank you all. Thank you all for joining in. Take care.